Welcome to the greatest game of Jenga and ping pong. The trap is the beginning of every single move. Why do I criticize the bear flag and the VWAP and every single technical indicator you can give me out there? EMAs, Fibonacci's, everything you want to throw at me, RSI. I'll throw all that, I'll wrap it up, and I will throw it in the garbage. Okay, if you're trading with that stuff, honestly, if you can do it, I applaud you, but in terms of how I view the market, that is all a bunch of nonsense and garbage. There's only one thing that really matters if you believe that the market is an auction, right? And think about it like from a very common sense point of view. Whoever is doing the buying and selling, they're essentially buying at certain levels and they are selling and taking profit at certain levels, right? And as the saying goes, buyers want to buy low and sellers want to sell high, right? And in the middle, the pigs go get slaughtered. So in the middle here, like this morning, why would I want to be trading in the middle here? Why would I want to be trading in the middle here? There is no need to do that. This was the setup right here to get short, and this was the setup here to get long. Why and how? Well, very simple. In this video, I'm going to try to explain as simple as I can, and it has to do with the trap. This low, this 46 level is a level of support. We've been trading in this for quite some time now, and yesterday we were in that same range as well. So today at 7 o'clock, well, my time, your time was 9, I said I want to get long 46. And especially if we flush below 46 and we reclaim 46, which is exactly what happened here. This becomes our trap. Okay, on a 2-minute time frame, it could look like this. On a 5-minute time frame, it will look a little bit different. It will look more wicky. And then on a 15-minute time frame, well, it's going to look even better because you're going to see that it just becomes a wick on its own. You can see that right there. Look at that wick. You see that wick? That's the wick right there. That's the trap to the downside. Not just that, we had something else very, very deliciously lined up. We had the bear flag, right? We had a bear flag kind of shaping out at open. And then anybody who was FOMOing short at the bottom here, they're getting trapped. So the market's doing 3 things. And if you fail to understand these 3 things, you fail to understand everything. 1, very simple. I'm passionate about what I'm saying because it is remarkable. 1, the market has left stops here. The market knows it's got stops at the bottom here. So the market needs to do these 3 things to make this move really, really explosive. An explosive move. Follow along. 1, we basically take the stops of these longs right here. Okay, we grab stops. 1, that's liquidity grabbed by the market. 2, anybody who got short here, their stop losses are going to instantly be here. So we're going to put SL right here. Okay. So anybody who got short and had FOMO into this dump here, their shorts, their stops are going to be right here, right here, right here, and of course, right above here. So that's the second magical part of the trap. And then the third and final part for the trap to have an explosive move to the upside or to the downside, it is right here at the key. You see these stops right here? This was done on purpose to get shorts excited, to basically trap shorts. And where are the stops? They're all right above here. And as the market is, you can see, pushing higher right now. Well, what's it doing? It's eating through all these stops, and it's going to have more liquidity, aka fuel and gas, to go where? Back up and retest that 68, which is the level we broke down from yesterday. It's the greatest game of ping pong and Jenga ever created. And the moment I started to pretty much see it this way, and I know it can seem complicated, and I won't deny that maybe I don't explain myself the best, but the moment I started to view the market as this game and view the market as this kind of trappy game, if you will, I kind of leveled up my trading in the sense of understanding where trend is going and being able to put myself in a situation where I can be at the forefront of every single move. So instead of trying to chase price here, I can be in the game right here. And this is arguably the best point of entry of the entire move. But really, it was overnight at 4 o'clock right here. Where's the 4 o'clock? 4 o'clock. This is right right here at 4 a.m. this morning. This was the beginning of the real move, and it looks a whole lot like the one we just had at 46. So that's why trade the trap, understand how liquidity actually works, and I mean, you can basically get rid of a lot of things from your chart, like even order flow and a bunch of other things. I'm not saying that those things don't work. They do. But you really need to invest a whole lot of time into all those things for them to actually work. Anything in the market will work, but you got to be able to basically digest it, the information, learn the information, and put the information to the test and gather your data, right? So I know the video went on a little bit longer than just trying to explain the traps, but what it is amazing that people still use things like VWAP, things like EMAs to make trading decisions. And for me, those don't work. They never really did. Even these trend lines, I only play around with them. I mean, I joke around with them, but I don't really care about them. Like, for example, this V for victory. But anyways, that's the end of the video. I'm already getting ahead and out of topic, but just understand that these V's and these traps, they tend to play out over and over and over and over and over again, because the market needs liquidity. The market seeks the path of least resistance. Therefore, it needs to create these traps. So if you don't trade them, it's likely gonna be you the one getting trapped. So I'll leave you with that. Peace. Thank you for watching. It is Wild Thursday, and it sure was wild. So peace.